I am Kevin Martini, and I'm a mortgage strategist with the Martini Mortgage Group at Benchmark Mortgage. And this is a special video edition of the Martini Mortgage Podcast, which I am calling What No One Is Telling You.
This is the Martini Mortgage Podcast with Kevin Martini.
If you tune into the Martini Mortgage Podcast frequently, thank you. If this is your first time, then welcome. This is going to be an amazing first episode for you. Right now, no one is telling you the real story about what is going on. And if you are buying a home for the first or the fifth time, you need to know this. In addition, if you're working as a realtor in the real estate arena, no one is telling you this either. And I believe you need to know this too. There is no question that we are living in unprecedented times. The coronavirus is having an impact not just on your everyday life, but it's also having an impact on the mortgage industry too. The impact could be equal or greater than what has happened to the mortgage industry in 2008. That is correct. You heard me properly. The impact could be as worse as it was in 2008. Not for home values, but for the mortgage industry on the aggregate. If we are to compare the S&P 500's recent performance to a time in history, it appears to be a rinse and repeat, in my opinion, of the dot-com bubble and the tragic events of 9/11. During the period of September 2000 to October 2012, we were in a recession. The S&P dropped 45% during that period. Even though the S&P dropped during that period in 2000, the annual home appreciation was 8.6%. The annual home appreciation was 6.6% in 2001, and in 2002, the annual home appreciation was 8.5%. Yes, real estate was a killer investment during the period of time, and I believe it continues to be a killer investment even in these unprecedented times. Folks, I am putting my money where my mouth is. I am not sharing to boast, but to illustrate. I believe in real estate, and towards that end next month, I am personally scheduled to disclose over $1 million of real estate, because I believe if one wants to create wealth, true wealth, they need to own real estate, especially in unprecedented times like now. Speaking of unprecedented times, the mortgage industry is there right now. And getting a loan may become a little harder now and in the future until things settle. It has always been important, but now it is critically important on who you get your loan with. If you are in the real estate right now, you do not need a lending vendor. You need a lending partner. My fellow mortgage strategist, business partner, and youngest son, Logan Martini, and I will continue to help families secure the lowest cost of borrowing while providing trusted advice with a world-class experience before the house, during the process, and even when you are in the home. Just open Google and type Kevin Martini Zillow reviews to have confirmation. What I am seeing right now is a potential servicing runoff. Wow. Listen, this is a big thing because the anticipation of a servicing runoff impacts you when you are getting a mortgage or a home loan. To expand, let me explain at a high level the mortgage process. For conversation purpose and illustration, you come to me to get a home loan. Thank you for your business. Now, I am a loan originator, and yes, we currently service about $1 billion of mortgages. But this year, we're going to originate north of $5 billion in mortgages, so I may or may not be your long-term servicer. It's important to know whoever your servicer is, it does not matter. The terms of your loan are the same when you had got the loan, and I want to make sure that makes sense. So whoever the servicer is, it's academic. The terms and conditions of your loan all remain the same. So you now have your mortgage, and you are in your home, and you're making your payments, and you are making your payments to the servicer. It's important to know the servicer does not really own your loan. They only are collecting the payment, and they will forward those payments to the investor. Are you tracking? So, you see, the role of the servicer is a very important one. So how does a servicer make money? You see, the servicer will buy the rights to servicing the loan. Now, typically they pay 1% of the loan up front, and then they receive about 30 basis points or 30% of 1% per year. This means their break-even period is more than 3 years. Now, servicers generally leverage the purchase of their servicing rights, so they pay about 50% of the 1% to buy the loan in cash and borrow the other 50%. This amplifies the problem, especially right now. You see, the loan servicer needs to keep a loan for 3 years plus before they make any money. Right now, a servicing portfolio has several risks, not in any order of importance, but number one is many people are refinancing their loan and they are losing money because they have not paid 3 years of payments to the servicer. Number two are concerns that the servicer have regarding unemployment numbers. You see, simply put, when people are unemployed, they do not have the money to make their mortgage payment. Number three is right now people are out of work and there may be a wealth of early payment defaults of loans that have already been originated, and that is a very bad thing for all. So what I believe will be happening, and what no one is telling you, is getting a mortgage right now may be harder than it has been before or in recent times, and that is because even if the rules allow someone to get a loan for 500 with a 580 credit score, a servicer may not be willing to service that loan because of the current unknown risks in the marketplace. So they will put overlays or shrinking what someone can qualify for. What does this mean? So even though the loan program allows one to get an FHA loan with a credit score of 580, the field is getting shorter and we can only help someone with a credit score of 680. Now, this is just an example. This will not just happen to me at the Martini Mortgage Group at Benchmark Mortgage. This will happen with every lender in the U.S. Listen, this is a real thing, friends. We are seeing a jumbo loan market seize right now, and we are seeing investors embrace these overlays on all loan programs, especially in the government arena, which includes FHA home loans and VA home loans. Here's the hashtag Kevin Martini Live talking point. When the unemployment rate goes up, that means the risk to a servicer because they feel it means default. When interest rates fall, that means to a servicer, loans are going to be paid off sooner and they need to keep the loan for 3 years plus to get close to break even. The break even period may actually be even longer if they finance the servicing rights. I have always preached this suggestion. Get your loan first and then go find your home. Right now, this strategy is not a suggestion. It is the only way to go, in my opinion. In addition, who you are getting your loan from matters even more. Let me explain. I have heard some lenders have been unable to deliver money to the closing table on the date of closing in recent days. So this is a real thing, and no one is telling you this. I do not want to impress you, but I want to impress upon you that my business partners and I are very well capitalized, and we are prepared for the long haul to help you as a home buyer, or you and your family refinance, or to help you as a realtor help families you work with get the lowest cost of borrowing, close on time with a frictionless process. Now, this episode of the Martini Mortgage Podcast was not curated to scare anyone, And definitely, it is not intended to say the sky is falling. I really believe there is light at the end of the tunnel. That light is not a train coming at us. It is paradise. Now, I am in Raleigh, North Carolina, and I am recording this from my secret location that I'm quarantined at. But in Raleigh, when it snows, the town has a big rush to get bread and milk. The roads are icy, and everyone is locked in their homes, and it is like the market screeches to a halt. But when the snow and the ice melts, it's business as usual, since the fundamentals before the snowstorm remain intact after the snowstorm. I share this analogy because before the coronavirus, the fundamentals of the U.S. economy were strong, so the slowdown caused by the coronavirus did not erode the fundamentals. Do not misunderstand me. The coronavirus is a bad thing, but this bad thing has not impacted our infrastructure. And for this reason, I see a V-shaped recovery turbo fast once the issues are resolved. And I really do not see a U-shaped recovery, nor do I see a slide that we all will have to get government cheese and eat it down by the river. The servicing issue will be resolved through time, maybe sooner than later, but not as a mortgage loan officer, but as your mortgage strategist. It is my obligation, duty, and responsibility to share what is going on and what you can expect. Let me close with this thought. If you are thinking of refinancing, it is smart to be proactive and reach out to the Martini Mortgage Group at Benchmark Mortgage and give me, Kevin Martini, or Logan Martini a call at 919-238-4934 and let us develop a strategy to save you money every month, or let us develop a strategy to get you debt-free quicker. If you are thinking of upgrading, now is the time to explore the options. Did you know that many of the families we work with are able to buy first and then sell? Again, it needs to be loan first and then go find your home. If you are renting and you want to explore options, I think it should start with education. I suggest you visit www.martinibuyerguide.com. You see, every season, Logan and I produce a homebuyer guide that simply and effectively communicates the current market opportunity. With what you read, you may have questions. If so, just give us a jingle at 919-238-4934, and we can talk about, now that you're ready and willing, let's put the word able in. Right now is a ground floor opportunity, and Logan and I are here to help you seize it. I have not shared what no one is telling you, not to scare you, but to inform you. I always thought it was asinine someone would call a call center and talk to someone to get a mortgage, or worse, push a button and get a mortgage. For almost all of the families we work with, their mortgage is the largest debt of their life. One should have support, not just understanding their options, but they should have local access to someone that can provide trusted advice from someone that has a servant's heart, not commission breath. This is what Logan Martini does. This is what I do. This is what we do for the families that we work with. Thank you for tuning in, and thank you in advance for sharing this episode of the Martini Mortgage Podcast with someone that might benefit. Be safe. I'm wishing you peace and sending you blessings.
The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143. 214-439-62. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.